It's HSA time! Hi, I'm Liz from Liz Gets Loaded. The money kind of loaded, though I do usually drink wine while I record these. Not this week though, I have a beer. Let's see if I can retire in 5 years, shall we? Now, let's get one thing straight first. You should probably be careful taking financial advice from someone whose username implies she might be drunk. You can read this full disclaimer down in the description. I'm on the path to FIRE. FIRE stands for Financial Independence, Retire Early, though I prefer the term work optional because even when I have enough money to retire, I'll probably keep working just because I like it. Today we're talking about HSA hacks, things you didn't know about your health savings account. Or maybe you did know some of them and you just like to geek out with fellow HSA nerds. Either way, come on in. Now, what is an HSA? I'll link to some basic information about HSAs. This video is more of a 201, but here's a basic definition. An HSA is a triple tax advantage bank account. If you have a qualified health plan, you can contribute pre-tax money, your savings grows tax-free, and you can take money out tax-free to pay for qualified medical expenses. Now, thing number one you might not know about your HSA, how to get the best tax advantages. Your HSA contributions are exempt from federal income tax, and unlike your 401k, they're also exempt from FICA. What's FICA? FICA is Medicare and Social Security. Combined, they're a tax of 7.65%. That means for every $100 you put into your HSA, you save an extra $7.65 on top of the regular tax savings. But, there's always a but. In order to get the extra 7.65% tax savings, you have to make pre-tax contributions through payroll. If you open your own HSA and contribute, the contribution is still tax deductible, but you miss out on the FICA advantage. So if you can, make your HSA contributions through your employer's payroll. Thing number two you might not know about your HSA, it's an investment vehicle. You can invest the balance in your HSA. A lot of people think of an HSA where you put money in and then you take it out when you have medical bills. But in between when you put it in and take it out, you can let it grow in the stock market. Remember, this is not financial advice, just in case you forgot. Next thing, I think it's number 3, you might not know about your HSA. There's no time limit to reimburse yourself. Remember how I said you can use the time between when you put the money in and when you take it out? Well, that time can be as long as you want. Let's look at an example. Let's say I put $1,000 into my HSA this month, and next month I have a $1,000 medical bill. I could take money out of my HSA to reimburse myself for that medical bill today. Or I could do it next year. Or 5 years from now, or 20 years from now. You can let your money sit in your investments and grow over time. Because remember, HSA money never, ever, 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 ever expires. Sometimes folks will get an HSA mixed up with their FSA. The money in your HSA is yours forever, even if you switch jobs, even if you switch health insurance plans, even if you don't spend it by the end of the year. Next thing you might not know about your HSA, it's a secret retirement account. You put money in pre-tax, you can invest the balance, and there's no time limit to use the money. So what happens to your HSA when you want to retire, if you haven't already used it for medical expenses? Something magic. In retirement, you can access your HSA in 2 ways. Here's the first. Let's go back to that $1,000 medical bill I mentioned. Let's say I never reimbursed myself for it. I could use money from my HSA to reimburse myself in retirement so I could access my HSA funds tax-free. The other way is after the age of 65, your HSA basically acts like a traditional IRA, meaning you can take money out of your HSA for any reason. It doesn't have to be for a medical expense. If it is for a medical expense, you get it tax-free. If if you take it out and it's not for medical expenses, you just pay ordinary income tax on the withdrawals. All right, here's a good one. Your HSA can give you airline miles? Kind of. Okay, your HSA is a bank account, so usually it will come with a debit card or it comes with checks. So if you want to use HSA money to pay for medical expenses, you could use that debit card or those checks. But I think a better solution is to pay for any medical expense with your credit card. That way you earn miles or points, cash back, whatever you're into, then reimburse yourself from your HSA. Remember, you can reimburse yourself right away, or you can give yourself time. Okay, this one's pretty cool. There's a tax loophole for domestic partners and non-dependent children. There's a cap on HSA contributions. In 2021, it's $3,600 for individuals and $7,200 for a family. But if you're two domestic partners covered by a family medical plan, each person can contribute the family max for a total of $14,400. It's pretty cool. Now know that the same loophole applies to adult, non-dependent children covered by their parents' plan. So if that's you, you can put in the $7,200 family max even though you're just one person. That's because you're covered by family coverage. Once again, not tax advice. Don't forget. So, to recap, your HSA is cool. It has a FICA tax advantage when you make payroll contributions. You can invest your HSA. HSA money never, ever, ever expires. You can hack your HSA to make it into a retirement account. You can earn cash back or miles on HSA purchases. And there's a tax loophole for domestic partners and non-dependent children. If you learned one thing or you just enjoyed geeking out about HSAs, make sure to like, subscribe, or leave a comment. A nice comment. You can also find me most days on Instagram or Twitter at LizGetsLoaded. Thanks so much, and I'll see you next week.